Hello, everybody, and thank you for joining us once again for another incubator interview. So today I'm joined from the Helios team with Gabriel Shaw, and we're going to be talking with Ray Shilling and Chris Barnes, who's got his EnergEOS hat on as an advisor. So let's get things started. Ray, could you tell us about EnergEOS and what you do?
Yes, thanks for having me, Gabriel, and thanks for inviting me to be part of the Helios team. It's been a phenomenal experience, so I really appreciate that. EnergEOS was founded 4 years ago, and it's the merging together of renewable energy, electrified transport, and programmable blockchain technology. So essentially, EnergEOS supports the bringing the EOSIO platform to the world of renewable energy and sustainable transportation.
So how have you found the incubator program? What benefits have you had from that so far?
Well, I think that's been phenomenal. I mean, the team is just absolutely top shelf. We've been able to, it's one of the best teams I've worked with. I've been doing startups for 20 years. This is my 5th startup. And we just, the kind of, the consulting, the advice, the way to structure pitch decks and really refine your messaging and your strategy to then be able to go and take that to prospective investors. So it's been an absolutely phenomenal experience, and I'm really enjoying it.
That's good to hear. I think one of the main benefits is that you've got sometimes such a complicated program and development, and then you can really whittle it down and present it in a way which is concise and understandable and appealing to investors. So when it comes to EnergEOS, could you tell us about how you're going to be integrating with the blockchain?
Yes. So our platform, we're developing a regulatory compliant platform that provides for tokenized financing of solar facilities. So what that allows to do is essentially connect the facility owner who's looking to add liquidity and perhaps refinance some of the existing debt to bring in on the investor side, either retail investors or institutional investors, to allow them to then invest in these projects. And it's the first time that's been able to happen.
Yeah, so I can add a little, like the tokenization, the blockchain, the reason why that's necessary to have this function is because you want to be able to, in a trustless manner, tokenize the equity and ownership stake of these projects. And it's the idea of micro ownership. So it's shares or it's equity. So it's like shares, but because it's on a blockchain, it becomes trustless. It also allows for much simpler means of transacting and trading the ownership. And so that's, I think, key. Or blockchain enables what otherwise would have been not possible.
And it reduces friction in the system. So, traditional banking routes, the traditional banking has been providing the financing and the debt structure for building solar facilities. And those traditional routes require, a full legal team, an accounting team, and often requires investors to be accredited, right? So all of those things combine to make it, there are barriers to entry for the average retail investor to be able to join in and support both their own community solar projects and also solar at large. So our platform allows the average investor to now play in this space, which is kind of exciting.
It seems like a great opportunity for many people to get involved with. And There's a lot of talk at the moment in press about energy and the direction we're heading. So I'm just wondering what it is or why you've chosen to act now with EnergEOS.
That's a great question. The timing is perfect. We have the coming together of these two rapidly expanding markets. The solar energy industry today is about $1 trillion market. But the thing to know is that 2021, the global investment in energy was about 1.9 trillion, so almost $2 trillion. And of that, 70% of it was renewables, right? We also saw a 45% growth rate year over year between 2020 and 2021. And estimates are that the total spend in the entire global industry could be as high as $23 trillion through the year 2040. So the time is perfect right now for obviously this the renewable energy industry. And if you combine the fact that the programmable blockchain growth, industry itself is nascent. It's very early. It's still young. The programmable side, right? Bitcoin's been around a while, but programmable infrastructure and architecture is really only the last 3 or 4 years. So these two industries are both growing extremely rapidly. And what we're here to do is attempt to stitch those two together, right? So we're not going to be the only team doing it. There are other energy blockchain teams around the world that are building. But we think we have some secret sauce with some things that we're doing that might be a little bit better and make us really competitive.
Gabriel would like to ask a question. I'll just cut this part.
Chris, you've been in the EOSIO community or the EOS community, correct me where I'm wrong, for I think about a year. I'm assuming it's something like a year, right? And then Helios is a very new venture, and you're very much part of the team at Helios, and then you're also on the now more recently the Telos Foundation board. I'm not sure if I'm saying that right, but your industry experience, your professional background is in the power industry, right? Can you give us a bit of a clarity on that puzzle picture and then relate to your industry experience?
Sure. Yeah, thanks. So yeah, I'm an EOS Genesis holder. So by the strictest definitions, I've been around since the beginning and have been recognizing the utility and the importance of what EOS is during the ICO. It was my first altcoin. I was a BTC maximalist from 2013 when I first got into crypto. And then EOS was the first chain, other than a couple little dabbly ones that seemed interesting, but I was never anything, like I took a sizable percentage of my Bitcoin and diversified into EOS, recognizing the utility of what this blockchain can do. So yeah, I've been around since the beginning, more active in the community since the Eden process and that first trial election back last April. And so my success in that election has kind of pivoted me to this kind of being more involved in blockchain, and then got me into Helios as well from that involvement. Prior to that, so I was actually laid off from my job working as a director of solar operations in a Canadian owner, operator, and constructor. So they did greenfielding. So it was a renewable power company. They greenfielded, so starting from scratch, wind, solar, and hydroelectric. The hydroelectric stuff that they bought for the most part. But so 12 years, I worked in renewable power. I spent 7 years working for General Electric as a site lead in various sites in Canada, running operation maintenance, fixing, climbing lots of, I'm handy on a ladder, hands-on, but then also ran teams, built up how to do O&M on some of these teams. I recognized General Electric had this very much a cookie cutter approach to doing ops. And I recognized that is impossible to do. The idea of cookie cutting anything is completely devoid of nuance. And especially when it comes to renewable power plants, situation, the turbines are located on a mountain. I had to learn how to drive a big Bombardier, basically a ski slope. It was this 2600 Bombardier thing with huge, like multi-articulating joystick for all the gimbal to do the plow, to get up the mountain, to get to the turbines. So, this was in the east of Canada in the Gas Bay, as opposed to a wind site in Texas, where it's pretty easy to get to a turbine. So a lot of the success in renewable is measured, the KPI is often called availability. And it's the time-based availability that a renewable generator, a wind turbine, or a solar inverter, if you would look at solar, that they're up and able to produce power. There might not be any wind, but as long as they're available. So anyway, these kind of KPI and how you can service a machine that's faulted when it's at the top of a mountain versus one that's in the middle of the field in Texas. I learned a lot about the nuance of ops and how do you structure a team and actually try to deliver on these benchmarks that you have to, there's if you don't hit your target availability as a service provider, you suffer losses and financial losses as a company. So I learned about ops, got into solar, ran and learned. I was the first one in Canada to buy a DJI Matrice drone, which is their industrial scale drone that had an IR camera, to recognizing the importance of being able to scan an entire 100-acre solar facility in 15 minutes. I can scan an entire facility and look for the heat signature of solar modules that then indicate whether they're producing power or not. Prior to that, the legacy method was to go around and do what's called IV curve tracing, which you have to do basically open. You have to wear a full Cat 4 bodysuit, and you check with a meter, essentially, each of the strings, and you can do about 10% a year. So after 10 years, you checked the DC health of your facility, which is crazy. I can do that with a drone in 15 minutes. So anyway, my approach as an operator was very much efficiency. How do we get the most electrons out of these plants? That's my background. Part of my job at the end was a director of solar operations prior to the layoff, which was like a corporate structure move where I was removed. But I saw a lot of the financing of plants. I know how much debt goes into these plants. I understand the operational costs. I understand the revenue streams that are possible. And the debt is quite astounding for a lot of these plants. There's an example plant that I know of that was purchased for roughly $68 million, and 54 million of that was debt. So there's a ton of debt on these plants. And so in the world of interest rate uncertainty, which we're currently in, a lot of these owners, they have to refinance. Often these are 5-year terms often, and there's a cost. It can be $500,000 to $1 million just to refinance your plant, never mind the debt carry costs that you have. So what we're trying to offer is there's two customers, right? We're offering an ability for these owners to deleverage this debt. So take part of that equity, which is a lot of it's debt that's tied to that equity. They can take part of that equity, sell it on the market in this tokenized method, which is frictionless. It's much easier for them to do that. There's no other means for them to do this anyway. So they can now sell some of that, generate revenue or generate capital. They want to pay off debt, fine. So it reduces their dependency on interest rate fluctuations, or just pull in some capital to redeploy. Because you pull in 10 million bucks, you can lever that up and actually have 100 million, depending on how you want to lever that and the other collateral you put up. So they can actually build more or acquire more plants as an owner by having this other means of financing. And then the other customers, what Ray mentioned, where now regular folks like us who aren't accredited investors can actually own a piece of a physical plant. That is impossible right now to do that. You can't do it. The only way you can get exposure to physical renewable plants is by investing in like First Solar, like the stock, the company that has multiple plants under operation, but not a physical individual plant. And there is a lot of revenue. There's a reason why a lot of big hedge funds and big institutions are investing in solar and renewables, because it's a nice, stable form of revenue, completely dependent on the ability for these plants to be well operated and maintained. And that's the key piece here that we bring as a team. The reason I'm an advisor to this is because I have so much background on ops. So when EnergEOS brings in a project that we're going to then tokenize and offer to individual investors to now purchase a piece of that token, I'm going to be the guy that helps set up the team to ensure that these things are being operated so they can deliver revenue over the 30-year typical project lifespan.
Right. That was a perfect summary. In fact, that's where I was going to jump in and add, and that the critical point of this is that if you're offering tokenized financing for a group of investors, and these folks are relatively new to the space, they're all putting their money in, they're betting on you. One of the things you have to make sure is that the operation and maintenance of that facility makes it work. And the beauty of having Chris involved is that he's been there, he's gone through that entire process, and he understands how to make sure that the facility is running properly and is profitable, and so that the tokens are being the investment is being well marshaled. The key is both Chris and I are veterans in this space, right? We both started back in 2010. When we started in 2010, the solar industry was entirely subsidized. It was not competitive to fossil fuels in terms of producing electrons. And but that's where we cut our teeth. So I became NABCEP. I'm NABCEP certified myself. I've actually installed solar systems. So we go way back. We know a lot of people in the space. We enjoy working in that industry, and we feel like we can do a good job there. That's really the key. The key is to have the passion for the game that we both do, to make sure that these clean and safe energy sources are available for us to reduce pollution and to provide a safe future for the kids, right? So that's really been our goal. Our goal is to make sure that we bring blockchain technology to this industry and provide reduced friction and better systems to facilitate additional growth. So that's really the key here, is that we feel like we're rather uniquely qualified. The two of us have a good combination of skills, with both a dozen years in renewable energy combined with 4 years in blockchain and programmable blockchain. Myself, to throw a few more things in there, 5 startups, software-related startups. So I understand what is required to build an application, deploy it, do the sales and marketing, roll it out, get it done. So that's really the key. The key is to have that combined skill set. And we're really glad to be able to work with Helios on developing that.
Fantastic. So, yeah, go ahead.
Pardon?
Okay, I'll cut again. Sorry.
Yep.
All these answers are brilliant, by the way. Okay. So the energy industry is really competitive. I'm wondering whereabouts you position yourself as a market fit.
Yeah, well, I mean, it's competitive. The definition of competitive is broad here, right? So it depends on what we're trying to do. We're competing with traditional financiers because we're an alternative financing method. So it depends on the target. So that's for the owner. We're competing against traditional financiers. And then from the token holder who wants to buy these tokens, we're competing with legacy stocks. Like if you want to buy, but there's actually is no competition because a traditional unaccredited investor cannot buy physical operating solar assets. It is not possible without having buddy and a couple $1 million to invest in some sort of fund that's going to deploy. And even still, it's not on a project by project basis. That's the other key here, right? Is you can now choose. If we have 100 projects on our platform and you want to, this is a problem I had when I worked for my previous company. We had assets, solar assets, in a cluster in Ontario, and we had a cluster in Wisconsin, Minnesota, and we had a cluster in Alberta. Well, for a while, it was just in Ontario. So if it's cloudy in Ontario, because weweather patterns, they're all in a cluster, there was no solar generation for the company. And if I'm a token holder, I now have the option, if we have plants in Australia and in Chile and in Texas and in Ontario, I can now take my $1,000 investment and I can buy a little piece of solar in all of these jurisdictions, which just further not only my diversifying out of traditional markets and into stable renewable power, I can actually diversify into stable or distributed geographies as well. So it's decentralized in that respect. There is no competition for that. We're the first ones to do this.
So a little bit more on the use of the blockchain. Like what I'm hearing is that this is good for power plants, right? Because of the better financing that you are actually able to bring because of the business model. That's fantastic. That's very interesting. I'm curious if there are certain types of power plant, for whatever it's supposed to be called, that is more appropriate in the market, and if there are others that are not suitable for what you're doing. That might give us some perspective on the market opportunity. And then also, I was around 2017, and I'm pretty sure I saw at least a few ICOs that were promising to tokenize energy, right? So is there a difference of the technology? What technology are you using? Have you solved any constraints in terms of that infrastructure that have been required? A little bit of perspective on that use of blockchain.
Yes, I can start off on that, and then Chris, if you want to jump in a minute here. One of the things that actually interesting you bring that up. In 2017, I actually started my work in energy blockchain working on the proof of work side. So I was actually an Ethereum developer initially. And I joined, I was sort of consulting and working with a couple of teams, several of them in North America and one in the UK. And the interesting thing there is that these were phenomenal teams that had raised capital, and they're built on the Ethereum blockchain. And great people, great technology. But I think one of the things that has slowed down their acceleration has been sort of the gas fees and some of the transaction costs associated with proof of work networks. So through no fault of their own, they're great people, but they had a hard time sort of accelerating into the space, and even to this day are having some challenges around that. So in 2018, I actually found EOSIO. And the EOS platforms are, as most people know, the transaction costs are much lower. The transactions per second, the TPS speeds are much higher. And it's generally a more sort of a high performance network to allow the IoT, the Internet of Things type solutions that we're building to be much more readily deployed with more attractive cost components. So EnergEOS, if I right up here, says energy blockchains for the EOSIO, energy blockchain solutions for the EOSIO platform, essentially means bringing the various use cases for the energy industry over to the EOSIO platform because we believe it's better suited for these types of applications. And Chris, if you could touch on the other question on what type of power plants are best suited, where's the sweet spot?
Yeah, I will. But one thing I think it's important to distinguishing about energy and blockchain, often they were actually tracking electron flow. So we're focused on the ownership of the asset. We're not trying to track actual generation and tokenizing the generation. That's a big difference. And the other thing about EOSIO that makes it so awesome, that's important to recognize, is the half-a-second blocks. So even though we have high throughput in terms of transactions per second, it's that quick half-a-second block that can allow someone to make a trade that on a decentralized blockchain, like on a decentralized exchange, you can execute that trade in a half a second, you get the feedback, as opposed to others like Ethereum, where you're waiting far longer to get that latency of action. So, but in terms of what projects are good or not, there's going to be a threshold, there's going to be a cost to set up a plant. So as a project owner, and there are hundreds and hundreds of project owners, there are thousands of these plants that would be appropriate. And they're not just all solar. The thing is, we're going to start with solar, wind, the same, hydroelectric, the same, any long-term generating plant. I mean, we could even oil and gas would apply to this. Not that we really want to go there. We're kind of focused on, green stuff. That's where our passion is. But any of these generating plants, you're just tokenizing ownership and then sharing the profits of that revenue. So any plant that's too small might not really be appropriate because there's just not enough upside to justify the cost to get you into our system. The other thing is if the plant is too old. So part of the price discovery of these tokens is going to be a lot of power plants. Most power plants come with what's called a power purchase agreement, a PPA. So that is usually with a regulatory body, and they're the off taker. When there's a contract, when a plant gets built, it's usually almost always built with a contract in place to sell that power to. Otherwise, no one's going to invest in this plant. Why would any larger entity invest $50 million into a plant if they have no customer? So you go through this huge regulatory process that then issues a power purchase agreement. And those are usually time spanned. So typically 25, 30 years are the plants that I was working on. And so that's how long your power purchase agreement is. And so if you want to tokenize an asset at the beginning, that's great. You've got 30 years of now revenue. But if you've only got 5 years left, there might not be as much of an opportunity to tokenize that plant because it's almost at end of life anyway. The other thing that's important to point out is that when the asset owner tokenizes the asset, part of owning these plants is paying to maintain them. Like O&M, operation and maintenance, is a fee. So that is all baked into the formula. You've got some financial models of this, and the way it works is the token owner, as part of the equity gets tokenized, they'll still pay their pro rata share of the ops cost. So the asset owner, not only do they benefit from generating capital, they also deleverage themselves from the risk of ops. So, because sometimes things happen, things blow up, transformers can explode and inverters can go down for an extended period of time. So this availability thing that I spoke about, that sort of is the precursor of how financially successful these plants are, they can now share some of that risk, which is important because there's a lot of risk here. And I think that's another attractive piece. The other thing that's really interesting about this is, as a service that EnergEOS can provide, we're going to function almost as an asset manager. And that is a big piece of power plant operation, is managing these assets. And I've gone through a lot of training on this, and it's fairly intuitive, but that is something that we can help provide to these asset owners, and we can help them manage their assets by asking the important questions and doing due diligence, which we'd want to do for our token holders, but we can do that for the asset owner. And then what I think is an opportunity here that we'll explore at some point is the cost of insurance. Insurance costs for renewable power plants are going up like 20% a year over a couple of years. Like it has been big, and it's an unavoidable cost, and that comes right out of the bottom line. So this is like when these plants get built, they get built with an OPEX and a CAPEX over 30 years. Tough to clairvoyantly come up with. I had to do this as my job prior. It was like build out these budgets. How am I going to know really this is a brand new inverter to the market? I can't be sure how well it's going to perform over time, or I can't be sure that. And so insurers are having these issues now where they need to start to raise their prices because of this uncertainty. And if we can be better asset or help these asset owners manage their assets, we can then perhaps pool this knowledge base and work with insurers to say, hey, these guys get the EnergEOS blue check mark because we're helping them manage their assets, give them a discount on their insurance rates. So there's a lot we can do with this to become some sort of this trusted entity to help these power plant owners do what they need to do. And that will help bring in, like, they're going to want to come to us. The idea that, like, yeah, we'll go out and I have relationships that we're going to go and try to make some relationships and get these plants to come in. But if we do this right, they're going to want to come to us. This is something that they're like, we're going to be having to turn plants away as opposed to trying to bring them in.
Go ahead, Ray.
I was just wanted to add one more point, Gabrielle, that's kind of a tangent to your question, but is important to point out. If you look at across your portfolio, if you take the average investor, if you're at all like me, and I do this, I have my safe investments. I take a portion of my money and I do a little bit more risky things, right? We fit in your portfolio, we're in your safe investment bucket, right? So rather than some of the more speculative DeFi things that we're seeing today with liquidity pools and E-curve and all this kind of fun stuff, those are high risk, high reward. What this is we are tokenizing a physical asset, a hard asset that has a 20, 25, or 30-year reliable income stream that allows you to go ahead and invest in a project with a fairly healthy rate of return, but do it in a very safe manner. So it is the conservative side of your investment. So that's important to point out.
You want to know what the numbers are? I can tell you in terms of the return as a token holder on two different plants, actual numbers, if they each tokenized roughly 10 million of the asset. So one asset was, it was a $67 million project cost. If you tokenize 10 million of that, starting in year one, the return to the token holder, so that's 15% of equity. The return to the token holder would be in the first year, assuming the models are correct, and a lot of these for the beginning are quite accurate, 9.92% IRR first year, second year, then it goes down. So what happens is some plants, if they have the fixed PPA, the power modules, the solar modules themselves degrade over time. So the revenue actually goes down over time because it's a fixed power purchase agreement per megawatt. So it starts at 9.92% IRR, and after 10 years, it's down to 8%. And at the end of the full thing, it's, it drifts down after that, 3, 4, 5, 6% near the end of lifespan. And then there's another one that was a different formula for the PPA, because some of them actually don't have a fixed PPA, but they pay a market rate. And that's a new type of, if it's not as controlled market in some places. So this one started off as a 6% return, and then it ramps up partway through to 10%, 11%, and actually goes up over time, 12%, 13%. So and these are actual models. Like, those aren't numbers out of thin air. This is actual financial models used to justify the investment to build these plants. That's the type of return a token holder could see. Yep.
And so in today's, sort of interest rate environment of 1%, 2%, 3% for safe investments, going up to 6, 8, 10%, for a blue chip, a fairly safe guaranteed investment with power purchase agreements that are locked in through energy utilities and purchase agreements. These are much more safe investments that are also yielding 6, 8, 10%. So we believe that that's sort of a sweet spot for many investors.
So me as an investor, would I be buying the tokens for a specific plant? Chris, you did say that somehow I'm getting distributed across different geographies. So as EnergEOS is adding new plants, is that diversifying my risk and my reward as an investor, or am I do I have to manually chop and change of where my tokens are pointed at or something like that?
You pick. Yeah. So we would bring in more projects, and then you could choose on the marketplace to sell some of the existing tokens. So when you buy tokens of a project, you're purchasing, you look at the suite of projects, and you decide on the marketplace, because there's going to be a price discovery of the price of these tokens, which is really interesting, right? So that the asset owner is going to put up a bare floor price for what they want to generate. And this will be like almost like it's an ICO of sorts, and they're going to issue tokens, and token holders can then buy at the floor price that's set. But then there's going to be a market rate that's going to determine, and these prices might go up or down. And as the assets age, you would expect the price of the token to go down, because it's not going to yield as much return over the remaining lifetime. But you'll get to choose which assets to own. You're not buying a basket.
You'll have essentially a buffet, right, that you can choose from. And you'll be able to pick the projects that you believe in. We'll also have sort of index type tokens that allow you to buy across an entire spectrum, right? And the beauty of it is that you could even have your own community solar project, such that if you had something in your town, in your county, you could actually go ahead and just invest right in your own solar in your backyard. So that's the beauty of it. You could be a major holder in your own community solar and say, hey, I own 1% of the community solar project right here. Or you can go and invest in something around the world, or a combination of the two, right?
So
all of the above. So
we've been talking about the level of retail investors, or like $1,000, you know, it sounds like this could certainly be relevant for family offices who want to preserve wealth for like larger amounts of money. But is there also opportunity for bigger companies? Would you see this as a possible corporate investment, even up to those insurers that you were talking about having a hard time? Like, how much money could be put into this? How much do you think you could collect?
It's dependent on the number of projects that come in.
Yeah.
So the more projects that come in, the more opportunity is to buy pieces of the projects. And if there's only a limited number of projects, but people want to get involved, that just drives up the price of those tokens. So like in terms of the investor, you're speculating on a couple things. You're speculating on the success of that asset, but even the tokenized ownership piece might go up in value. If negative interest rates start to become a real thing, you're going to be happier with a 5% yield, a 4% yield. And so the price of the token goes up, because when you're acquiring that asset now, in order to get your return, it depends on what you paid, right? So that's the other thing. That IRR is dependent on how much you just paid for that tokenized slice. And that there's going to be a price discovery on open market to determine that.
I'm quite interested in the customer journey experience when you're on the website, and how you're going to acquire the audience. Is it going to be, so that the investors, are they going to be EOSIO token holders? Is that going to be your first target audience? And then when it comes to the plants themselves, what strategy do you have in place to attract them to your platform?
that's a great question. So our current thinking right now really is to build on the success of what others have done. And so I think we're looking really at a channel partner development process, right? So between the two of us, Chris and I know a lot of the major players in the space. And so I think the first thing we're going to do, of course, is build a functioning platform. That's going to be the ability for the owner, the asset, the facility owner to log in and enter their projects in and have them available for investment. And then we're going to have the investor side of the application that allows you to log in as an investor and pick from those projects and place your bets on who's going to do well, right? And start to do that. So once that framework is in place, I think the fastest way to success for this is going to be to partner with some major players in the industry, and we know who those are. Those really are the folks that are, sort of at the vanguard of new technology applications for the energy space, and the folks that are most likely to understand both the value proposition and how to execute on this, right? And so we're gonna have a short list of folks that we partner with early on, who they themselves have access to dozens and hundreds of projects that they can bring into the fold. Then once that happens, that's really the easy part. The more challenging part, of course, comes to getting the investors to believe in the system and start jumping on board and investing in the projects. So the technology itself, that's something we believe we can handle fairly readily. And then it's the real work begins, which is the business development of going out and introducing it to the market. That's where the rubber meets the road.
So you need to be an EOSIO token holder to take part, or are you going to have your own token, and you're just built on the technology?
Yeah, we're leveraging. So yeah, there's no as it stands now. It's not like we're just building a front end to a back end EOSIO platform that is where the trading and all that's going to take place. So we're not building that. We're leveraging an existing product that we're going to tie in, but that product is the EOSIO.
So and that framework provides us the ability to accelerate into the market fairly rapidly. And we've got good partnerships in place with the EOSIO community. Both Chris and I have been working here obviously for 4 years. And so we know how to get it done. We know a lot of the people and have good relationships in the industry.
So usually
we hope.
Yeah.
we hope they believe in us. So
Yeah, you sound both like you have a vast experience in this area. One of the things I'm quite interested in as well is when you have the plants on the platform, is there going to be a hierarchy or a structure, perhaps something to incentivize them to go through your due diligence process? Or is it going to be presented to investors as a blanket available market and you can pick and choose? Or is there going to be some form of hierarchy?
in other words, will we have a rating system ourselves? I would imagine yes, and this is what's so valuable to have Chris on the team, is that if there's anybody who can assess the viability of a project and sort of give it a star rating, if you will. I don't know if we're going to do that early on, but I think that's where it'll evolve. Chris is the guy who could certainly get that done, right? Examining both the physical plant, the finance terms, the P&L, the balance sheet, the PPA, the power purchase agreements, and who the players are, and assess the viability of the project. But I think that's a great idea. I hadn't actually thought of that, which is sort of a rating or ranking system eventually that will allow us to give that sort of visibility to the better projects, if you will.
And a safer investment.
Yeah, that might enable that risk reward, that if certain plants or projects are deemed a little bit more risky, then maybe the plant itself has to offer a slightly higher dividend yield or something to investors.
Yeah, that's fantastic.
Interesting. Curious a little bit more about the incubator program experience for you, Ray. I'm thinking it hasn't actually changed your business model, and we did see the earlier, the comprehensive papers that you'd already had even at the beginning of the incubator program. But I think the process of developing the pitch deck must have helped in terms of looser parts of the business model. Are there some highlights that come to mind of what you've got out of it for EnergEOS, or things that it has actually changed about your approach to the business?
That's a great question. Well, I can tell you this from a personal journey standpoint. The last time I had to go out and raise money was more than 10 years ago. The last sort of startup where I was part of the fundraising equation. And things have evolved. Particularly what has evolved is, Gabrielle, your structure that you bring in, I really learned. I mean, I'm a veteran of startups, and I sat going through your courses, and I was like, wow, that's a great idea. And I was furiously taking notes, and that's why a lot of times my video was off, I'm over here writing things down and so on, because I thought I knew, right? I mean, I thought I knew how to do a pitch. But no, it's really been fantastic, because you've allowed me to fine tune the message to get rid of all the noise and stick to the signal, right? And so that's been really phenomenal. I feel like I'm a much better sort of presenter and pitcher, and really that's really fine tuning the content. In fact, Chris Waxa is an absolute genius in helping. He went through our slides the other day and said, hey, do this, do this, do this. And in about 15 minutes, he'd taken it from an 85 to a 95%, just from minor tweaks. So it's a phenomenal team. Yep.
Fantastic. Chris, any other thoughts on the project that you'd like to be able to share for this interview?
I mean, no, this has been great. I've also, echo what Ray has said about Gav and Waxa, what you guys have brought. I'm learning a ton. Like I'm the project manager or whatever for Helios, but I don't have any VC background, and I'm not like, this isn't. So having you guys on the team, a ton of credit where it's due. You guys are making this happen, not me. I'm learning as much as those in the incubator, and I really appreciate what you guys bring. I appreciate the time to go through this interview with us. And yeah, I think it's pretty cool to see all this come together, and so many like-minded and intelligent people trying to push in the same direction. It's I think we're going to be able to achieve quite a bit.
Right. I think
if I could add one more thing, actually, I don't want to finish this without thanking actually Brock Pierce. I mean, he's a cryptocurrency visionary, Bitcoin Foundation evangelist, goes around the world spreading the word of the importance, right, of alternative currencies and having decentralizing and putting the power of the currency back into the hands of the people. and he's been a longtime supporter of the EOSIO platform. And so to have that all kind of come together around this Helio initiative that he's funding, I really wanted to thank him as well. Thank you, Brock, for the excellent work that you've done and continue to do for cryptocurrency. And in today's situation, as we sit here today with things evolving in Europe and the things that are happening in the world, it's becoming even more and more important to allow people to have a greater voice in the influence of their own currency. So thank you, Brock, for that.
Thank you both for coming on today. I really appreciate it. And I'm looking forward to doing another interview with you both again. And perhaps we'll go through your pitch deck in the near future.
Yes. Thank you so much, Chris and Gabriel. Excellent work. Thank you.
Thank you.
Okay, guys.
Okay.
Bye.
Bye.